Data and deals. India has signed a one-year deal to source liquefied petroleum gas from the United States. Now, 10% of our annual LPG imports in 2026 will come in from the US. The deal comes at a time when New Delhi is looking to diversify its energy sourcing and increase energy trade with the US amidst the ongoing trade negotiations. Sapna is here with more details. Sapna, Minister Hardeep Puri tweeting in the morning, calling it a historic first. Take us through the contours of the agreement that the oil marketing companies have now inked for US LPG.
Absolutely. We are given to understand that this particular LPG contract with the US companies had been under works for quite some time. And it was a matter of fact as to when the final deal would have got stitched. Well, the timing could not have been more appropriate when all the talks with the US in terms of striking a BTA is ongoing. And you also have the Russian crude story playing out in the background. You have this big development in terms of the LPG sourcing coming in from the US. So, of course, we are given to understand that, basically there could be two aspects to this. Some questions have been raised in terms of, what about the pricing? How do you compare this with Saudi CP? Mount Bellevue, many of the analysts say that they have not really heard much about it, simply because probably the US is not a very public LPG market, so to speak. So in comparison to Saudi CP, probably it is not as well known. But however, having said that, we also reached out to people like Kirit Parekh, and his view is this, that in terms of the pricing advantage, well, he doesn't think that the Indian oil cores will be at a major disadvantage as far as the Saudi CP is concerned, simply because there's a lot of competitive pressure in the global market at the moment and people are out to get deals. So that's one aspect. Second, most important, and this is something that Mr. Puri has also pointed out, it was very important to diversify our gas, our LPG benchmarking. So far, it was only the Saudis from which we have been buying mainly, like 85 to 90% odd of those 20.66 MTPA, imports. A very large percentage is coming from the Saudis. So this is a good way to diversify that, and going forward, it's a one-year deal right now. The US does not have any government-owned, oil cores as such, so it's a one-year contract that we're talking about. Going forward, there could be more development on that front, but in terms of prices, analysts and Dr. Kirit Parekh, they do not see much of a difference. The difference could actually come in terms of the logistics and the transportation costs, because sourcing from Saudi in comparison to sourcing from the Gulf Coast of US, there could be some bit of impact.
Well, that is a real issue there. What will it mean in terms of transportation cost? And that we will have to find out. Sapna, many thanks for joining us. Now, US Treasury Secretary Scott Bessent says Washington is hoping to finalize a deal with China to secure supply